Hello traders, welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Sunday, January 5th, 2014. Coming into the end of the year, the broad benchmark S&P 500 broke out above the prior multi-year high at 1812 and auctioned up to a new record high at 1846. Following the New Year's Eve rally, when traders returned for the shortened holiday week session, S&P futures sold down from the record high at 1846 and pulled back on Friday to 1821, 1823. While it could be argued that the rally started following the FOMC announcement back on December 18th, the initial move back up to 1812 was primarily a short covering rally through the previous trading range. The breakout above the previous multi-year high saw the S&P rally up 34 points or 1.8% above the previous high. Friday's sell-off saw the S&P pull back 25 points or 1.3%. The Follow the Bots computational model estimated that the S&P would reach an exhaustion point when it traded up to 1845, the extreme price excursion level. The Follow the Bots computational model has been back-tested to 1995. In analyzing the market development for the S&P 500, it is typical that after the market breaks out above a previous multi-year high, there is a secondary response and the S&P typically sells off from the high and often will pull back to retest support at the previous breakout point. When the S&P sold off from its new multi-year high, it initially gapped below the high and traded down at or near 1834. There were several price levels where responsive and initiated selling occurred during Thursday's sell-off. In the context of the gap that developed at Thursday's open, responsive selling is located up at 1840 and 1838. During the holiday rally, we noticed that there was below average volume during most of the upward moves. Therefore, we inferred that the average range pullback relative to the multi-year high at or near 1830-1829 was likely to be a weak support level. The S&P did initially find support at 1829 and auctioned back up to 1834, where it was met with responsive and initiated selling as it traded down to 1823, 1824. On subsequent retracements back to the 1830 price level, the market encountered responsive selling. During Friday's Globex session, S&P futures breached support and probed for stops, trading down to 1821. On Friday, the market auctioned back to the 1832 price level and on both occasions encountered responsive selling. When we look over the volume at price data that developed during Thursday's sell-off, we can see that there was a large block of initiated selling that developed between 1834 and 1832. We expected to see the S&P encounter resistance on the initial retracement back to this price level. When we look over the volume at price data that developed during Friday's session, we can see that once again there was statistical high volume responsive selling as the S&P auctioned back up at or near 1834, 1832. During Friday's retracement up to the 1832 price level, the order flow monitor indicated that the computerized trading programs ceased executing to the buy side during the initial retracement. The S&P sold down from the 1832 price area and pulled back to retest support at 1823. The market made a second attempt to auction back up to the 1832 level and once again met with initiated selling. While the selling pressure backed away during the pullback down to the 1823 price area, and the broad benchmark index made an attempt to auction back up towards the multi-year high, the modest 10-point retracement indicates that the market may not have built up a base of support yet, and therefore we would not be surprised if the S&P auctioned down below Friday's low. Stops are likely to be resting 2 points below Friday's low at or near 1818. The ideal pullback level remains the previous multi-year high at 1812. There is a large block of statistical high volume from 1808 up to 1812. Should the S&P breach support at Friday's low and auction down to the 1812 price area, we would expect to see the market hold support at the previous multi-year high and auction back up through Friday's low. Minor resistance up at the 1832 price level is only likely to hold until such time that the market confirms support at or near Friday's low. The next resistance level above Friday's high is located up at 1838, 1840. That concludes our daily recap for the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.